Every morning, before you have had your first cup of coffee, the government has already claimed their portion of what you will earn today. No invoice, no negotiation, no choice. And yet we pay. Not just in South Africa, but in every country on earth, in every area of recorded history, across every political system that has ever existed. Governments take money from people, always, and they always will. The answer that most people never stop to ask, but that every serious tax practitioner must be able to answer, is this: what actually gives the state the right to take your money? That question is not a submersive one. It is not a question of a tax evader or a philosopher in an ivory tower. It is the most fundamental question in all of taxation law. The answer that shapes everything, every provision in the Income Tax Act, every VAT return, every dispute with SARS, every argument about whether a deduction is legitimate. I am Fani Janse van Vieren. I'm a CASA. I hold a LLM in International Taxation from UCT. And this is VEVA Academy. Welcome to episode 1. And we are starting exactly where you should start, at the beginning. To understand why tax must exist, you first have to imagine what happens when it does not. Imagine being in a world with no state, no government, no courts, no police force, no army, no rules that anyone is bound to enforce, just people. In 1651, the English philosopher Thomas Hobbes thought this through in his masterwork, Liviana. This conclusion was unsparing. In the state of nature, a world without government, life would be, in his famous words, solitary, poor, nasty, brutish, and short. Why? Because in a world without enforcement, the strongest person takes what they want. There is no property because no one can defend a claim to it. There is no contracts because no one has to honor them. There is no safety, just raw, continuous competition for survival. Now, you may say Hobbes was being dramatic. Maybe. But look at what happens in real societies when state authority collapses, when law enforcement withdraws, when courts stop functioning. What fills that vacuum? Hobbes' point is not theoretical, it's empirical. And his conclusion leads directly to the foundation of tax law. Rational people will agree to give up something, some portion of their freedom, some portion of their income, in exchange for protection, order, and the certainty that their rights will be enforced. This is the bargain. This is why tax exists. Not because the state is powerful enough to take it, but because we agree, collectively, that the arrangement is worthwhile. 3 philosophers gave the world the social contract theory that underpins every modern tax system. They disagreed on details, but they agreed on the essential structure. Hobbes, as we have seen, believed that without a powerful sovereign, life is chaos. The state earns its authority and its revenue by providing order. John Locke, writing in 1689, redefined this. Locke believed that people have natural rights to life, liberty, and property. The state does not create these rights. They exist before the state. The state exists to protect them and to protect your property rights. Locke argued the state needs funding. Tax, in Locke's framework, is the fee you pay to have your property rights protected. Think about that for a moment. The state taxes you to fund the courts, the police, the legal system that protects your property from being stolen. In a sense, tax is what makes your property yours. Jean-Jacques Rousseau added a democratic dimension in 1762, the social contract. He introduced the idea of the general will. What a society collectively agrees to through democratic process is legitimate, even if individual members would prefer not to comply. Tax is not a unilateral imposition. It is the expression of what we, collectively, have decided is necessary for our common life. And then there's Adam Smith, writing The Wealth of Nations in 1776, the same year as the American Declaration of Independence, which was very much about taxation without representation. Smith gave us the four canons of taxation: certainty, convenience, efficiency, and equity. These are still the benchmarks against which every tax system is evaluated today. These four philosophers do not appear in the Income Tax Act, but they are embedded in its structure. Every section that provides for clear rates and thresholds reflects Smith's canon of certainty. Every provision for electronic filing reflects convenience. Every deduction for business expenses reflects efficiency. The progressive rate structure reflects equity. You cannot be a serious tax practitioner without understanding the philosophical foundation you are standing on. Because without it, you are applying rules without understanding their purpose, and you will misapply them. Now, from philosophy to South African tax law. Because in this country, the country we are sitting in, the right to state to tax is not merely a political assumption. It is constitutionally grounded and constitutionally limited. Section 25 of the Constitution protects property rights. It says the state may not arbitrarily deprive you of your property. On its face, this sounds like a constitutional prohibition against taxation. Tax, after all, does exactly that. It takes your money without your individual consent. So how is this tax constitutional? Tax passes every one of these tests. The Income Tax Act is a law of general application. It applies to everyone who meets its criteria. The limitation is reasonable and justifiable. And in a constitutional state built on human dignity, the founding of public services is directly linked to the fulfillment of human rights. An extract from our Constitution under Section 36(1) reads, "The rights in the Bill of Rights may be limited only in terms of law of general application to the extent that a limitation is reasonable and justifiable, and in an open and democratic society based on human dignity, equality, and freedom, taking into account all relevant factors." But here's the deeper constitutional logic. The Constitution does not merely permit tax. It creates the reason why tax must exist. Look at sections 26 to 29. The right to adequate housing, the right to healthcare, the right to sufficient food and water, the right to social security, the right to education. These are not aspirational statements. They are justifiable rights. Courts have enforced them, and they are called passive rights. The state must do something to fulfill them, not just refrain from harming you, but actively provide services. And positive rights cost money. So the constitutional architecture is actually a closed loop. The Constitution protects your property rights in Section 25. It permits limitation on those rights in Section 36. And it mandates the delivery of services in Section 26 to 29. Tax is the mechanism that makes the loop work. There are procedural dimensions. Section 77 of the Constitution designates money bills as a special category. Only the National Assembly may introduce legislation imposing tax, and the Minister of Finance does so annually through the budget speech. This is why every tax change announced in February requires an amendment to the Income Tax Act before it becomes law. The Constitution sets the process. Section 227 to 229 deal with national revenue and the division of revenue between national, provincial, and local government. Every rand of tax collected flows into the National Revenue Fund, established by Section 213, before being appropriated by Parliament. The point is this: taxation in South Africa is not an arbitrary exercise of state power. It is constitutionally authorized, constitutionally limited, and constitutionally purposeful. The final dimension of why tax exists is the most practical, relevant for practitioners. Tax as fiscal policy. Governments use tax to do three things beyond simply raising money. First, the revenue function, funding public goods and services, roads, courts, schools, hospitals, the South African police force, SARS itself. None of these exist without revenue funding. Second, the redistribution function. South Africa has one of the highest levels of income inequality in the world. The tax system is designed in part to address this. Higher earners pay higher marginal rates. The revenue collected funds services that benefit lower income South Africans disproportionately. This is the purpose of progressive rate structure and is deliberate policy choice, not an accident. Third, the regulatory function. Tax is used to change behavior. We levy higher taxes on cigarettes and alcohol because society has decided we want less of those behaviors. We give deductions for retirement contributions because we want people to save. The same goes for the tax-free investment account. We have the employment tax incentive because we want businesses to hire young unemployed South Africans. The carbon tax introduction in 2019 is designed to change the behavior of emitters. Every single one of these tax expenditure, a deliberate use of tax system to achieve a non-revenue objective. When the Minister of Finance delivers the budget speech each February, every announcement, every adjusted rate, every new threshold, every new levy is a fiscal policy decision. Understanding the tax is policy, not just law. That is what separates a technical practitioner from a strategic one. So why does that tax exist? Because without order, life is Hobbes' nightmare. Because rights need to be protected, and protection costs money. Because a constitutional state built on human dignity must deliver services, and services require revenue. And because tax is one of the most powerful instruments any government has to shape the economy, reduce inequality, and change behavior. There is a quote I want to leave you with. It comes from Oliver Wendell Holmes Jr., a US Supreme Court Justice, writing in 1927. He said this: "Taxes are what we pay for civilized society." That quote appears fittingly above the entrance to the US Internal Revenue Services building in Washington. I like to think SARS should consider something similar. Now that we know why tax exists, we can start building the system. And in episode 2, we will look at South African tax systems in detail, the key pieces of legislation, the role of SARS, the Tax Administration Act, and the hierarchy of authority that governs every decision you make as a practitioner. If this episode gave you something to think about, please like, subscribe, and share it with a student or a colleague who is starting their tax journey. And drop a comment below telling me which philosopher view of taxation resonates most with you. Thank you.